Interest rates are pushing home ownership further out of reach for families hoping to buy their first home, move for a job, or buy a bigger home as their family grows. They're forced to keep renting or to turn down job offers. Homeowners keep their homes off the market because they feel trapped by current interest rates. That keeps the supply low and drives up prices more. Meanwhile, all cash buyers, including out-of-state investors, fueled by cheap Wall Street cash, drive home prices higher by buying the few homes that do come on the market. High rates make it harder to build more homes and add housing options, which would bring down prices. It's why I've called for the Fed to bring down interest rates. Ohioans worrying about housing costs can't wait any longer. We see more and more renters and homeowners in my state and across the country whose only option is to pay more than they can afford for housing. Because rents keep rising faster than paychecks, high costs have pushed even more families, including parents working full-time jobs, into homelessness. This isn't just happening in the big cities or on the coast. It's happening in every state, in cities and suburbs, and small towns and rural communities. In Central Ohio, businesses are growing. I hear constantly from mayors, from county executives, from business leaders, from workers, that they're worried the housing supply won't be able to keep up with the growth and costs could rise even more. There isn't enough housing across the country, from Akron to Bozeman to Charlotte. Community leaders are worried that the high cost of housing will limit their region's ability to grow and to thrive. There's no place in the country, and hasn't been for some time, from even before the pandemic, where a minimum wage worker working full-time can afford even a modest 2-bedroom apartment. The home health aides and administrative assistants and retail workers whom we all depend on aren't even paid enough to afford a 1-room apartment. We've been struggling to create enough housing for years, for decades. Housing construction plummeted after the 2008 financial crisis. We've never made up for it for all the missing homes. So today, by some estimates, we're 4.3 million homes short of what we need. And anyone who's taken the most basic economic course knows that when supply is that low, high prices follow. Meanwhile, the homes we do have are getting older and need critical repairs that families and seniors and housing providers just can't afford, leaving children exposed to toxic lead, leaving seniors with dangerous fall hazards and unstable roofs and sky-high utility bills. Today, we'll hear from members of this committee on both sides of the aisle about their legislation to bring down housing costs, making our existing housing stock safer, and expand housing options for both renters and homeowners. I'm pleased that Senator Smith, who is one of the leaders in these issues, is here at the beginning. Because this crisis is hitting all types of housing in every community, we need more than just one solution to these problems. I look forward to hearing from colleagues about their proposals. Senator Rounds, Senator Smith have a bill that they've built a strong bipartisan consensus around, I believe 6 in each party on this committee alone, to improve rural housing and programs and prevent the cost of rural housing from going up anymore. There are also proposals to improve HUD's housing voucher program, keep housing affordable for manufacturing housing residents, and many more. I'm also offering proposals to bring down housing costs and increase housing options, including addressing some of the challenges I hear often from Ohio families. Housing Supply Fund would help community development financial institutions and affordable housing developers build and preserve more housing that's affordable for homeowners and renters. My Yes in God's Backyard, the YIGB, another Washington acronym, would support churches and other religious organizations with unused land who want to put that land to use for affordable housing. We should also expand solutions we know are already doing good work. The Grand Families Housing Act, which I introduced with Senators Casey, a Democrat from Pennsylvania, and Collins, a Republican from Maine, would build on success supporting intergenerational families. My Excess Urban Heat Mitigation Act of 2023 would help communities eliminate urban heat islands to better protect the health of seniors and families. And as eviction numbers increase, we know what it takes to prevent families from being turned upside down by an unnecessary eviction. The Eviction Crisis Act, introduced last Congress with my colleagues, Senators Bennett from Colorado, Portman from Ohio, and Young from Indiana, would build on successful models across the country and the success we saw from providing emergency rental assistance at the height of the pandemic to reduce preventable evictions. As aspiring homeowners struggle more than ever to afford their first home, I've also put forward 3 proposals to help expand access to affordable homeownership. The VA Home Loan Awareness Act I introduced with Senator Braun will help ensure that veterans and service members know about the affordable VA home loan option when they go to take out a loan. They've earned this benefit. They should know they have it. This week, I joined Senator Warnock in reintroducing the Down Payment Toward Equity Act to provide assistance to first-time, first-generation home buyers who are too often locked out of the housing market by the lack of a down payment. And the Helper Act, which I introduced with Senators Rubio and Ossoff, will create a new type of FHA mortgage to make first-time home ownership more affordable for law enforcement personnel and firefighters and teachers who are serving our communities but can't afford to live there. This common sense bill is supported by the Fraternal Order of Police, the National Association of Police Organizations, the major county sheriffs, the major cities chief of police, the International Association of Firefighters, the American Federation of Teachers, the National Education Association, and 200 other national organizations, mayors, governors, state and local groups across the country. They know firsthand how critical it is to support the people who teach our kids and keep us safe. The proposals we'll hear today about aren't all the solutions we need to solve our crisis, but they're a good start. Yesterday, we also received a budget from the Department of Housing and Urban Development that outlines housing needs along with proposals that can make our existing programs more efficient and more effective. I look forward to working with Ranking Member Scott and all the members of this committee to expand these proposals and to find bipartisan consensus around solutions that can help us reduce costs and expand options for renters and homeowners. Thank you, Senator Scott.
Thank you, Mr. Chairman, and thank you to the panelists for being here with us this morning. Certainly a very important topic for us to discuss the state of housing. Nearly a year ago, this committee had an identical hearing on today's topic of legislative solutions to address the increasingly more difficult challenge of achieving the American dream through home ownership. Although I'm glad the chairman has returned to this topic and agreed to seriously engage on building consensus around comprehensive housing legislation, like my Road to Housing Act, we have unfortunately watched a full year go by. And during the last 12 months, Americans have been stripped from the opportunity of becoming homeowners, in many ways because of the challenges brought to us by the current administration. One of the things I'd like to say, as I think this through a little bit, so many people have good intentions on solving the problems surrounding housing. But the truth is, when you look back 15, 16 years ago, the financial crisis of folks providing more down payment resources, more assistance to become a first-time homeowner without any financial literacy and financial education as it relates to how to own a home and how to take care of the home and being prepared for planned obsolescence. Things just become obsolete. Without that education, you're simply renting the home that you think you own. And then during the crisis, what we saw was some of the highest levels of foreclosures were those folks that were induced, or I don't want to use the word seduced, but induced to make a decision to buy a home that they could not afford because they thought they could afford the mortgage payment and not all the incidentals that come along with being a homeowner. Let me say this too. When you think about the crisis and the challenge of home ownership, those of us in Washington too often think that the solutions come from Washington. That is simply false. We can make a difference, but we are not the primary place where the difference should be made. As a former chairman of a county government, I can tell you that the vast majority of the issues facing home ownership happens on the local and the state level. Frankly, when you have communities that refuse to allow for an increase of homes to be built in their communities, then 10 years later, you complain about the price of the homes in that community. You can just look back and follow the breadcrumbs back and see that when you don't use the opportunity to fill in donut holes, when you don't use the opportunity to have high density areas for homeowners, you will not have more homes on the market. That is basic math. You think about the states and the roles that they play. This is not simply a federal issue. This is primarily a local issue and then a state issue, and in a very small part, we can play on the federal level. One of the things that we've seen in the past that has been very effective was the creation of opportunity zones in 2017 through the TCJA. As I think about whether you're a Republican or a Democrat, the one thing that's been celebrated across the country by blue mayors and red governors, so to speak, is the advent of opportunity zones. Think about my good friend who's a Democrat in Rock Hill, South Carolina, Senate Mayor John Geddes, who said that for the first time in more than 3 decades, the opportunity to build homes because of opportunity zones that lowers the price for contractors to build is there. I think about Charleston and Greenville, South Carolina, where you're seeing multi-million-dollar new investments, building homes and apartments and townhouses and condos because of opportunity zones. So there are things that we can do, but typically what government can do best from Washington is just to get out of the way and let the free market actually work. And that's why my release of my Road to Housing Act is such an important part of that consideration, because what we focus on is financial literacy and financial education. We focus on reducing the red tape. I talk to mortgage companies across the country, and one of the things that they say, left and right, is that the cost of closing more than doubled in the last 10 years, much of it due to the regulatory red tape that comes with closing it. But there are other issues too, and I'll name just a few. Number one, families are struggling more than ever to afford their monthly rent and mortgage payments, in large part because of Bidenomics. Bottom line is that when you print and spend trillions of dollars, it leads to high inflation. High inflation causes the Fed to respond, and the Fed's response with the one tool they have, which is always a hammer because everything's a nail, is to increase the interest rates. When interest rates go up, home ownership goes down. Number two, housing costs did not go up in a vacuum. The culprit is this administration's runaway, unchecked federal spending, aggressive interest rate hikes, and onerous regulations. That combination certainly cannot continue. Number three, current federal housing programs are not working. We have to improve the status quo so we can provide greater economic opportunity and safety across the nation. And finally, last year, HUD reported that homelessness has risen by more than 70,000 people, highest on record. With more resources and more tools, we've seen more people homeless in this country. It's clear that this administration's policies are certainly to blame. To address these shortcomings, it will take new solutions like those included in my Road to Housing Act to begin paving pathways towards prosperity. But I will point out the obvious. American families simply cannot afford to wait. For decades, the federal government has spent trillions of dollars on various housing subsidies. Despite this, folks who grew up where I grew up, folks who are growing up today where I grew up 50 years ago, simply cannot afford a home better today than they did 50 years ago. Since 1973, the basic percentage of African Americans owning a home hasn't changed very much. The number is 44%. That has not changed a single point, not a single point in the last few years. That is why I proposed a Road to Housing Act, a common sense approach to housing that takes a comprehensive view of federal housing policy and recenters support around families, helping those who are homeless, renting, or ready to buy a home. This isn't a partisan issue. It isn't partisan to want to reduce the red tape for home buyers. It's not partisan to encourage innovation and competition in federal programs to better support families living in manufactured housing or families who rely on HUD's assistance. It's not partisan to preserve affordable housing units and encourage private capital to play a role. It's certainly not partisan to require greater accountability for our current federal housing programs. So I look forward to hearing the additional proposals that my colleagues will bring up today so that we can somehow find a way to stitch together for every corner of our country a better process to becoming a homeowner. I also look forward to working with Chairman Brown to ensure that the committee hears from our housing regulators. The American public deserves accountability and transparency to understand how their dollars are being spent on housing programs. I thank you all for being here, and I look forward to your testimony and asking some questions.
Thank you, Senator Scott. I'll introduce today's witnesses. Matt Josephs is Senior Vice President of Policy at LISC, the Local Initiatives Support Corporation. He previously worked in policy development and implementation at Treasury's CDFI Fund as a staff member on this committee and as a policy analyst in the Department of Housing and Urban Development's Office of Public and Indian Housing. Welcome, Mr. Josephs, back to the committee. E.J. Antoni is a research fellow and public finance economist at Heritage and a senior fellow at the Committee to Unleash Prosperity. Dr. Antony previously served as an economist at the Texas Public Policy Foundation as an economic consultant for Freedom Works. Dr. Antony, welcome. Peggy Bailey is the Vice President of Housing Policy and Income Security at the Center on Budget and Policy Priorities, previously served as a senior advisor on rental assistance at HUD. Before her service at HUD, she was director of the Health Integration Project, vice president for housing policy at CBPP. She's held roles with the Corporation for Supportive Housing and National Alliance. Den Homelessness has been to this committee before a number of times. Welcome back, Ms. Bailey. Mr. Josephs, please begin.
Thank you very much, Chairman Brown, Ranking Member Scott, and members of the committee. I'm honored to join you this morning to discuss the urgent need to expand our nation's affordable housing supply and the measures this committee can take to support investments not only in housing, but also in small businesses and community development projects in low-income rural and urban communities. My name is Matt Josephs. I'm the Senior Vice President of Policy for the Local Initiatives Support Corporation. LISC is one of the nation's largest nonprofit housing and community development organizations. We're also a certified CDFI, and I thank Senators Warner and Crapo for founding the Senate's Community Development Finance Caucus, which now includes 24 senators, including 10 from this committee. LISC has local offices in 38 urban markets, stretching from Greenville, South Carolina, to Toledo, to Phoenix, and to Seattle. And we also have a rural program where we partner with 130 organizations working on the ground in rural communities in 49 states, Puerto Rico, and the Virgin Islands. If there's one unifying truth across all of these markets, whether urban or rural, small or large, it's that there's a chronic shortage of housing. It is estimated that our nation is underproduced on 3.8 million units of housing, and that's the low end of the estimates, the peak of a decades-long trend of underproduction. The lack of housing supply is hampering the ability of families of modest means to achieve financial stability. 1 in 4 renters pay more than 50% of their income in rent, leaving little money available for each month for groceries, medicine, childcare, and other necessities. In addition, recent increases in home prices and interest rates, combined with the limited housing supply, are keeping homeownership out of reach for far too many families. The lack of housing supply, both rental and homeownership, is also constraining economic development, particularly in our rural communities, where employers looking to open new plants and facilities have nowhere to house their workforce. Simply put, we need to build more homes. The most important tool we have to build affordable rental housing is the low-income housing tax credit. The housing credit has produced close to 4 million homes since it was created in 1986. We call on Congress to enact the Affordable Housing Credit Improvement Act, which would create over 1.2 million additional units of affordable rental housing over the next decade, and would also make it easier to finance properties in rural communities, Native communities, and those properties serving extremely low-income populations. We also call on Congress to enact the Neighborhood Homes Investment Act, which would spur the development and rehabilitation of close to 500,000 homes for homeownership in distressed urban and rural communities. Enacting both of these bills would spur the production of close to 2 million housing units over the next decade, cutting into a sizable portion of the 3.8 million home supply gap. We also call on Congress to pass the Rural Housing Reform Act, which has the bipartisan support of the majority of the members of this committee. This legislation would help create thousands more units of affordable rental housing in rural and Native communities, while also enhancing homeownership opportunity in those communities. Lastly, we need to continue supporting other critical housing production programs like Home and the Capital Magnet Fund, as well as rental subsidies provided through HUD's Section 8 program to help fill gaps in financing costs and to ensure that we can target housing to those most in need. But housing is just one of many important components of a vibrant and healthy community. LISC also invests in small businesses and retail establishments on commercial corridors and rural main streets and in community facilities supporting childcare, education, workforce, and community health. That's why it's important that Congress also protect and enhance critical community and economic development programs, including the New Markets Tax Credit and community development block grants, which have become an essential tool for disaster recovery efforts. We also call on Congress not only to support continued appropriations for the Treasury Department's CDFI fund, but also to enact legislation to support new tools for CDFIs, including fixes to the bond guarantee program, a tax credit to support investments in CDFIs, and enhancement to the CDFI funds authorizing legislation to facilitate the establishment of a secondary market for CDFI loans and investments. These represent just a few of the legislative proposals we highlight in our longer testimony. There are many promising bills and proposals that have been developed by members of this committee on both sides of the aisle, and we applaud you for recognizing the urgency of the housing crisis and for putting together thoughtful and meaningful responses. We urge the committee to consider these proposals so that they may be advanced to the full Senate for action. Our families and communities need support. We have the tools to support them. We just need Congress to act and to act quickly. Thank you very much, and I look forward to answering questions you may have.
Thank you, Mr. Jones. Dr. Antoni, welcome.
Chairman Brown, members of the committee, thank you for the invitation to discuss with you today the current conditions in the U.S. housing market, including those impacted by public policy, and especially the challenges encountered by many Americans today seeking affordable and safe shelter options. I'm a public finance economist at the Heritage Foundation, where I research fiscal and monetary policy with a particular focus on the Federal Reserve, and I'm also a senior fellow at the Committee to Unleash Prosperity. Since January of 2021, prices have risen across the American economy, a cumulative 19%, reaching monthly and annual rates not seen in 4 decades. Housing prices in particular have risen very quickly, even amidst generally fast rising prices for all goods and services. By any widely used metric, housing in the U.S. is considered unaffordable today for most American families, with shelter prices having increased much faster than incomes. The significant decrease in home ownership affordability, as well as the increase in rent prices over the last 3 years, were caused by several public policy choices, including elevated levels of federal expenditures and the imposition of regulation. Large federal deficits financed by the Federal Reserve's purchase of treasuries created inflation, systemic interest rate risk, as well as severe supply constraints in both new and existing homes. Unfortunately, many official metrics upon which we rely to measure shelter costs have greatly underestimated things like the true cost of home ownership by a factor of 4 to 1. That's something to keep in mind when reviewing, for example, this morning's very hot inflation print that showed shelter costs have risen 20% since January of 2021. Consequently, the typical American family's financial situation is even worse than a first glance at the data would indicate. The cost to own a median price home has increased between 80 and 100% over the last 3 years, depending on the source data and what factors you include in the calculation, like property taxes. Consequently, homeownership affordability is near record lows today. In many major metropolitan areas of the country, it takes more than 100% of the median household after-tax income to afford the median price home. In other words, it's impossible. Affordability has become a widespread problem in Western communities in particular because of the high proportion of restricted land in that area of the country. In fact, no major metropolitan area west of Des Moines, Iowa is considered affordable. Regulation has also imposed significant costs on the housing market, and these costs are often excluded from analyses of the problems plaguing home affordability. This is especially true for efficiency standards and other well-meaning measures which aim to reduce costs for Americans, but actually end up increasing them instead. Likewise, interventions that primarily increase demand for housing without lifting the restrictions on supply typically just result in higher prices. Misallocations of capital stemming from ineffective lending regulations also increase costs in the market, both for borrowers and buyers in general, through higher home prices and higher interest rates. There are several actions Congress can take to alleviate the cost of living crisis, especially regarding housing. First and foremost is to reduce spending, which will reduce crowding out and increase private market activity. It will also reduce borrowing, taking pressure off of the loanable funds market and reducing borrowing costs. Second, Congress would be well advised to rein in the Federal Reserve and prevent the violent fluctuations of money creation and interest rates seen over the last several years. Regulatory reform would also greatly impact housing affordability. Providing additional flexibility with things like which dwellings that qualify for subsidies is just one example. Rolling back ineffective mandates, especially surrounding energy, would also lower costs. Additionally, steps could be taken to increase financial literacy among borrowers and renters. Congress should also reevaluate existing subsidies, which primarily increase demand and benefit landlords, lenders, and other existing owners of capital. Similarly, Congress would do well to examine the track record of those regulations and other bureaucratic red tape which have curtailed the supply of homes, both single and multifamily, and therefore driven up costs, which low-income earners are the least likely to be able to afford. Banking regulations deserve particular scrutiny in this regard. Thank you kindly for your time, and I look forward to answering your questions.
Thank you, Dr. Antoni. Ms. Bailey, welcome back. Thank you.
Thank you, Chairman Brown, Ranking Member Scott, and the members of this committee. I really appreciate the opportunity to testify before you this morning. I appreciate this hearing for your recognition that we need bipartisan solutions to do better. We can do better by making it easier to get rental assistance. We can do better by making that assistance easier to use. And we can do better by advancing innovative programs that test ways to give people agency and autonomy. The data paints a clear and sobering picture. Over 22 million renters in 2022 were paying more than 30% of their income on housing costs. 12 million of those renters were paying 50% or more of their income on rent. Over 650,000 people were homeless on a given night in January 2023, an all-time high. As shown by this chart, rent costs outpacing income gains is a long-standing and has contributed to the affordability crisis for decades. Despite these alarming facts, federal rental assistance remains woefully inadequate. Only 1 in 4 eligible households receives assistance. People with low incomes are disproportionately people of color, and they are hit the hardest. 53% of people without assistance who need it are people of color. 47% are white. And of people experiencing homelessness, 37% are Black, 27% are Latinx, and 2% are Native American, all overrepresented compared to the general public. Many of these bills introduced by members of this committee can help people struggling to afford rent. And the Center on Budget and Policy Priorities recommends additional steps we should take to holistically address the housing crisis. The provisions in the Fair Housing Improvement Act introduced by Senator Kaine would prohibit voucher discrimination by rental owners. The Choice in Affordable Housing Act introduced by Senators Coons and Kramer would add some flexibility to the inspection process and create a fund to pay for things like security deposits to help renters access housing faster. While we have strong concerns about expanding the Moving to Work program, Senator Scott's Road to Housing Act rightfully prioritizes redeveloping public housing to address the unacceptable conditions too many people are living in. We recommend adding stronger tenant protections and an increase in rental assistance demonstration subsidies. We also would like the committee to consider the following. We must improve the over 2,000 housing agencies' abilities to work collaboratively across jurisdictions. We must allow for alternative screening and more efficient intake rules similar to those allowed in the Emergency Housing Voucher Program. We must redesign housing agency service and administrative fees, structures, and formulas also similar to the Emergency Housing Voucher Program. Congress must allow voucher subsidies to be used for security deposits, and we must give families more time to use their assistance. 60 days is not enough to prepare for a move and find housing. Your proposals also have the ability to spur innovation by the administration and your colleagues, especially appropriators. Senators Van Hollen and Young have done this with their Family Stability and Opportunity Vouchers Act. While more can be done, appropriators and HUD have found ways to make progress on their proposals, which has made a huge difference in the field. With that in mind, please consider supporting 2 other innovative ideas. Policymakers should test providing rental assistance directly to tenants, and Congress should authorize a demonstration program that allows families to deposit a portion of their rent increase from added earnings into an escrow account to help build savings. It will take big federal government investments and structural changes to get to the world we want to see, where everyone who needs help gets it. Relying solely on market forces hasn't and will never work. Multifamily development has been mostly on the rise in recent years, as the market is responding to the deficit in rental housing. But much of that new supply in development can only be afforded by people with high incomes. That's how landlords and property owners make profit. Serving people with lower incomes who can't afford to pay enough rent to cover maintenance and basic operating costs means less profit or a loss. So the market is responding exactly as we would expect. Therefore, government action is needed to help those where the profit potential of the market is limited or non-existent. As a nation, we have spent too long blaming and punishing people for being poor, for not having a home, for being evicted, and for struggling to pay their bills. Part of this punishment has been programs designed to be too hard to navigate, hard to administer, and absent of self-determination for the recipient. Many of the bills on the table today would correct these problems and do a lot of good for folks who need the help. Thank you again for the opportunity to testify, and I look forward to answering your questions.
Thank you, Ms. Bailey. I'll begin the question, Senator Tester from Montana.
Yeah, thank you, Mr. Chairman. I want to thank you and the ranking member for having us here, and I want to thank all three of you for testifying today. I appreciate it. I believe in supply and demand. In fact, I'm a farmer, and whenever there's a drought somewhere in the world, it's good news for me because that reduces supply while the demand stays the same. Mr. Joseph, you said that there were 3.8 million houses too short. And until that comes up, until we fix that supply problem, we're going to see housing prices continue to elevate faster than a lot of other things. So my question to you is, and I know there's a lot of folks out there that are in the private sector that want to do good work and they have money to do good work. What can the federal government do to release those folks who want to invest in housing, to urge them to build more? What is the single most important one? And if you want to go to some other ones, you can too. Need your mic on, please.
Yes, thank you for this. Just like being on the calls, right? Good to hit you unmute. Thank you for the questions, and the chairman actually, I think in his introductory remarks, highlighted an even higher figure of underproduction. 3.8 million is really the low end of some of the estimates that we've seen. And how can government help with this underproduction? You know, we highlight, I think the biggest single tool for rental housing is the low-income housing tax credit. And there's been legislation introduced by Senators Cantwell and Senator Young, the Affordable Housing Credit Improvement Act, which several of you are already co-sponsors of, so we appreciate that. That bill alone could create 1.2 million more units of affordable housing, including many in rural communities. And most notably, there's been a backlog, and a lot of the housing finance agencies they have a lot of shovel-ready projects ready to go. And so an additional infusion of credits could immediately hit the ground running with those. And on the home ownership side, we are also calling for the enactment of the Neighborhood Homes Investment Act that would create about 500,000 homes in distressed urban and rural communities. And the problem we're trying to attack there is that there is a value gap. The cost of developing or rehab these homes is more than you can sell the home for. And this is a particular problem in kind of Rust Belt and legacy cities, but also in rural communities where you've had a lot of increase in construction costs. So with the credit there, that's what, to your point, Senator, can really attract new investors because they know they'll be made whole when they make those investments.
Okay, so, and I appreciate that. You also talked about a bill that would incentivize housing built in rural and native communities called the Rural Housing Reform Act. What makes that bill different than the other two you just mentioned so that rural communities could take advantage of it?
So this is more about the preservation of existing housing. So you have the 515 program at USDA, which has mortgages on multifamily properties largely, and you can get some rental assistance through the 521 program for those properties. But when the mortgage matures, you can no longer get 521 rental assistance. So what you see is the risk of these properties like falling out of affordability. So that's what this legislation, that's one of the primary things they would do, would decouple it so you could use the rental assistance on these properties or other properties.
There's been statements made earlier about the federal government can't fix this, and I agree. The federal government can help, and so can state government, local government, and the private sector, absolutely. You've looked around, I'm sure. Are there things that some communities are doing that is unique, that's working?
At the local level, I mean, inclusionary housing has always been a very strong tool to encourage developers as they're doing market rate housing to also include units for affordability. ADUs are, now this is probably more of urban communities, but like smaller dwellings are good. I think and just making sure zoning allows for affordability and density around transit communities, that kind of stuff is, I think, very effective.
Okay. Thank you, Mr. Chairman. Look, there's not a place I go in Montana, whether it's a very small town or the bigger ones, and our bigger ones are about 100,000, so the small ones are much, much smaller than that there aren't housing challenges. And some of it is no housing available, and others, and you've already addressed both of these, the housing's there, but it's dilapidated. And so we appreciate the testimony. Thank you, Mr. Chairman.
Thank you, Senator Tester. Mr. Joseph, your comments have been helpful in this committee, but in this committee, we don't use the term Rust Belt. Thought I'd just let you know that.
Thank you, sir.
Senator Rounds? That really wasn't meant to be funny, but nonetheless.
Thank you, Mr. Chairman. First, I'd like to thank the chairman and ranking member for holding this meeting today. I'd also like to thank you for being with us today and for sharing your thoughts and your expertise. We can all agree on the need for more affordable housing and bringing the opportunity for our families to have a safe and affordable place to live, whether it's an apartment or a single-family home. Housing stability impacts so many of our lives: our health, how our children learn at school, our ability to build wealth, and the social benefits of belonging to a community. As we discuss affordable housing, we need to remember this includes all income levels, ages, and locations, including rural communities and tribal lands. One piece of legislation that would help increase the access to affordable housing is the Rural Housing Service Reform Act that I introduced with Senator Smith. Senator Smith and I have worked together over the last 2 years to create this bipartisan, common sense legislation that would provide the first meaningful update to the Rural Housing Service in years. I want to thank my colleagues on the committee, Senators Loomis, Tester, Crapo, Fetterman, Daines, Van Hollen, Cortez Masto, Britt, Warner, and Tillis for their support of this legislation. With over half the members of the committee evenly split, Republican and Democrat, this legislation is truly bipartisan in nature. The Rural Housing Service Reform Act would take large strides towards making RHS more accessible to folks across the entire country. The legislation would preserve workforce housing by fixing a long-standing problem for USDA Section 515 properties that now have maturing mortgages. It would expand both access and affordability of housing on tribal land by codifying a pilot program that leverages Native Community Development Financial Institutions, or CDFIs. And finally, it would make much-needed investments in technology upgrades so that USDA can process loans quickly and efficiently. My first question is for Mr. Josephs. Could you speak to how provisions in the Rural Housing Reform Act would increase access to affordable housing across the country?
Yes, thank you for that question. So what we're talking about is the Section 515 portfolio of housing at USDA that we talked about that we're losing. And we've lost, in 5 years between 2016 and 2021, we've lost 921 Section 515 properties. So, and some of them because the owners were opting out of their mortgages early. So, and that was 3 times more than the USDA had projected. So we're losing them at a faster clip than we'd even anticipated. So that's the criticality of this program is if they are being lost, at least let's get rental subsidies continuing there so they can keep being affordable to low-income families.
Thank you. And then, Mr. Joseph, one more follow-up. We've seen success in South Dakota with the USDA's Native CDFI Relending Demonstration Program. It was a pilot program that allows Native CDFIs to leverage their really deep ties in local communities and deploy loans to eligible Native borrowers. Could you speak to the success of the program and how expanding it could help increase housing affordability on tribal land elsewhere as well?
Yeah, we think a relending model is a great way to go. CDFIs have their roots in those communities. They know the borrowers. It's easier for them to kind of make those inroads than the agency staff. So it's just a great tool. They also use it for their community facilities programs. Utilizing the CDFI network is a really smart way to go.
Thank you. And look, it works. It's one thing, these folks understand tribal trust land and how to work through the issues of title. It actually makes it work. Dr. Antoni, Antony, and
Antony.
Antoni, thank you. Rising regulatory costs are a limiting factor on housing supply, particularly for the entry-level market in need of inventory. According to a study done by the National Association of Home Builders, on a dollar basis applied to the average price of new homes of $394,000 a year, regulation accounts for $93,870 on the final house price. Instead of creating new barriers to entry, we need to focus on incentivizing local governments and the private sector to work together to increase available housing stock in ways that best suit the communities that they serve. Unfortunately, the Department of Labor finalized a rule in August of 2023 that only increased red tape. Dr. Antoni, how has DOL's final rule impacted the costs of multifamily housing construction?
Well, thank you, Senator, for the question. Unfortunately, instead of focusing on measures which will remove red tape and therefore reduce costs, they have essentially created a system where they are, essentially, they are going to increase costs on home builders, and we have to remember that those costs are simply passed on to the home buyer, or in this case, the renter. And so instead of decreasing costs by allegedly making things more efficient, whatever the case may be, for those renters, the reality is that the average renter is just never going to actually recoup the initial costs that are being put upon them in the form of higher rents. A recent study, for example, showed that these regulatory costs are actually 3 times higher than what DOL has estimated them to be. And so when you're talking about a regulation that really only has a marginal benefit, and now you explode the cost by 3 times the original estimate, there is absolutely no benefit at all.
Thank you. Thank you, Mr. Chairman.
Thanks, Senator. Senator Smith of Minnesota is recognized.
Thank you, Mr. Chair, and thank you very much for doing this hearing. And I want to just start out by saying a few more things about our bipartisan rural housing bill. I want to thank my colleague and partner, Senator Rounds, for highlighting the bill and for talking about what is in this bill, which would help to preserve affordable rental and home ownership housing in rural communities by reforming the Rural Housing Service at USDA. You know, the ranking member said in his opening comments that some current federal housing programs aren't working, and I think we resonate with that because the purpose of our bill is to look at a federal program, the Rural Housing Service, which has been so important, and say, yes, it needs to be fixed. We want to make it work better. We want to reduce red tape, and that's what our bill does. And I think that's why it has gotten such strong bipartisan support, as Senator Rounds described. 12 members of this committee, evenly balanced between Republicans and Democrats. I also just want to point out that this bill is the result of numerous bipartisan hearings and also input from folks at the local level. We've heard so much from folks in not only in our 2 states, but people around the country who have told us what we need to do to make rural housing service programs work better. I also want to point out that this is not something that's just going to help a few people in a few areas. It has really significant impacts. We're talking about programs that help nearly 130,000 mortgages be more affordable for low-income Americans. We're talking about seniors, people living with disabilities, and folks in very low-wage jobs in rural communities. So that's over 400,000 Americans who count on the Rural Housing Service programs for a safe, decent, affordable place to live. I'm sorry, Ranking Member Scott had to step out because I would like to point out to him that in South Carolina, we're talking about homes for over 11,000 tenants with an average income in South Carolina of only about $14,000. So it is, and I could do the same for states all over the country that are represented here on this committee. Mr. Chair, I'd like to submit for the record a chart that lays out the numbers on how many rural housing service affordable units would be preserved by our bill, if that is
Without objection, so
acceptable.
ordered.
Thank you so much. Mr. Josephs, I know you responded to my colleague, Senator Rounds, about why it is important that we move this bill forward and that we pass it into law. And I just want to thank you for your comments. Is there anything else that you'd like to add that you think we should be keeping in mind on this committee as we think about the importance of protecting and expanding affordable housing in rural communities?
Well, just a reminder to folks that how acute the problem is in rural communities could be helpful. A full 44% of rural renters are cost burdened, and nearly half of them are paying more than 50% of their monthly income towards housing. Home prices are rising in rural communities as fast, if not faster, than urban communities as well. So there's an acute need.
I appreciate that. I think a lot of times we rightly focus on the challenges of affordability in urban communities, and we forget that folks in rural areas are suffering an extreme shortage of housing. As you said, as housing becomes more dilapidated, it gets run down, and then that's part of what we're trying to achieve with our legislation, which is to make it feasible for these homes that are existing as affordable to stay in that, to stay there. Ms. Bailey, I'd like to talk with you about something. Several of us on this committee have been working a lot, thinking a lot about what we need to do to improve federal homelessness programs. And one thing that we note is that during the height of the pandemic, a lot of levels of government cut red tape to speed up the delivery of service for people experiencing homelessness. And because we knew that this crisis we had to respond to it with urgency. Could you talk briefly about what lessons we've learned about those flexibilities and what that might tell us about how we want to continue some of those flexibilities going forward?
Absolutely. Thank you, Senator, for that question. I think this is essential for the committee to consider. We learned so much from the programs in housing that were delivered during the pandemic. Most importantly, the flexibility for local providers to be able to administer the programs as they see fit, to be able to meet the needs locally. We also learned that there's a lot of paternalism laid over the programs that inhibits, when we complain about access, how slow it can be for people to find housing, a lot of that is things that we can fix. We can make sure that people can get housing quickly. We can make sure that landlords get paid faster, and that assistance stays with people for as long as possible. The other piece that I want to mention, though, too, is that housing authorities need to get paid for the services that they're delivering. They can become more proactive in delivering services if we pay them well, and that's one of the other things that we did during the pandemic.
Well, thank you for those comments. Mr. Chair, I once worked at the local level, and I tend to trust folks at the local level to know best how to deliver these programs, and I think that's, as you're saying, one of the lessons that we learned. Thank you.
Thanks, Senator Smith. Senator Lummis of Wyoming is recognized.
Yeah, thank you, Mr. Chairman, so much. I want to talk about what I see as some of the really good work that we've done in this committee and highlight some of the legislation we might want to move forward. So thank you, Mr. Chairman. To catch up and meet the needs of Wyoming, we've got to build between 20 and 38,000 housing units this decade. We have the smallest population in the nation, so that gives you a sense of how significant our needs are. And in some ways, they pale in comparison to some of my colleagues here on the dais. It's a daunting task, and the Cowboy State is up to it. I'm sure your states are too, but we can improve the tools that we help make available to them. Senator Tina Smith likes to say that without housing, nothing else in your life works, and you're right about that. I'd like to add that without housing, nothing in your community works either. Not your neighborhoods, not your workforce, not your business, and not your economic growth. So I've been really pleased to work with you, Senator Smith, and my other colleagues on this committee on some of the challenges that we have with regard to housing. Solving the housing shortfall is going to take committed bipartisan work, and it's a great bipartisan subject. So first, we need to streamline the bureaucracy and take a thorough look at what's been working and what hasn't. The federal government threw a lot of money at housing needs and homelessness during COVID. The impact has been higher housing costs and more families competing for a shrinking supply of affordable homes. So spending money has not fixed our problem. And further, when those houses at their inflated value are reappraised for tax purposes, everybody's property taxes go up. So it's sort of a vicious cycle. I want to voice my support for Ranking Member Scott's Road to Housing Act that offers common sense reforms to existing housing programs. I also appreciate the very thoughtful reforms that Senator Rounds and Senator Smith have proposed in the Rural Housing Service Reform Act. I think together these pieces of legislation update programs that are in desperate need of reworking. I hope this committee moves forward on marking up these two important pieces of legislation. Thank you, Senator Scott, Senator Smith, Senator Rounds. Second, we need to expand the housing supply by eliminating barriers to construction and preserve the housing units we do have. Regulation blocks the construction of new housing by making it more expensive than it needs to be. Regulation adds $94,000 to the cost of a new home and accounts for a whopping 40% of apartment development costs. Now, I know a lot of these are assessed at the local level and not at the federal level, but we contribute to those additional costs as well. We need to find room for housing innovations such as modular housing, which delivers a high-quality product at a lower cost to buyers everywhere, especially in states like mine. We also need to preserve the housing that we do have. Rural housing tends to be older and in need of repair, but small loan sizes and an appraisal gap means it's very challenging for rural homeowners to finance the repairs they need. That's why I'm working with Senator Fetterman on the Whole Homes Repair Act to pilot an approach that would shift existing funds to a centralized source of grants for low-income families. And it's kind of fun to get to work with Senator Fetterman for the first time. Finally, interest rates. Irresponsible government spending spurred inflation, and home buyers and developers are paying for it in the form of higher interest rates. We think of the impact on mortgages, but high interest rates affect every step of the development process, from installing sewer, curb, gutter, water, streets, and other infrastructure, land acquisition costs, construction loans, you name it. The Federal Home Loan Bank system provides crucial liquidity to our financial system. They're also a source of creative ways to support housing and homeowners, and I'd like to work with the system to understand how we can grow the system's impact on the housing shortfall. After all, the middle of their name is Home Loan Bank System. Since 2010, housing development has lagged household formation by 5 million units. That's 5 million additional families that are competing for limited aging housing. It's taken decades to get here. We're not going to solve this in a single hearing, but we can make progress, and we are making progress. I think we've identified some really good ways to help move this issue forward. So I look forward to working with my colleagues on the committee to move forward with legislation on these issues. I think it's a real bright spot in the portfolio of bipartisan work that's happening in Congress, and thank you for letting me highlight it, Mr. Chairman, Mr. Ranking Member. I yield back.
Thank you. As I agree. Thank you for that. Senator Reed of Rhode Island.
Well, thank you very much, Mr. Chairman. I, too, want to make some comments before I ask the panel questions. There's no question we have an affordable housing crisis throughout the United States. And I hope when we come to reauthorize our infrastructure law, the committee will look seriously at many of these proposals that Senator Loomis and others have indicated. One measure I've proposed is S3673, the Affordable Housing and Home Ownership Protection Act. This measure is fully offset and would provide $50 billion for affordable housing construction and preservation. And Senator Loomis and I introduced S3905, the Property Improvement Manufactured Housing Loan Modernization Act, which would raise FHA Title I loan limits for manufactured homes and property improvement loans and make accessible dwelling units eligible for Title I financing. Senator Britt and I also introduced S3904, the Helping More Families Save Act, which would create a pilot program for family self-sufficiency programs, universal escrow accounts. And the bill would help thousands of families currently living in federally assisted housing to put a portion of their earnings into an escrow account that they can tap later for education, a vehicle, or a down payment on a home. And to make the experience of home buying less confusing and less of a hassle, Senator Hagan and I have introduced S3502, the Home Buyers Privacy Protection Act. And this legislation will restrict lenders from paying the credit bureaus to tip them off every time a potential buyer applies for a mortgage. These so-called trigger leads subject borrowers to endless spam calls and come-ons that can lead borrowers into making costly mistakes. And Mr. Chairman, I would ask unanimous consent to enter into the record a joint letter of support for this legislation from the Mortgage Bankers Association and 22 other organizations. Thank you. And finally, Senator Collins and I have long introduced S735, a bill to strengthen the United States Interagency Council on Homelessness. The council is the only federal agency with the sole mission of preventing and ending homelessness, and our bill would eliminate its termination date so it can continue to coordinate and streamline assistance across the federal government. Thank you for allowing me, Mr. Chairman, to talk about that legislation. Mr. Josephs, could you tell us how do Title I and manufactured homes support housing availability?
Yes, thank you, Senator. And also thank you for your tremendous support over the years on the appropriations side, supporting our critical housing programs like the Capital Magna Fund and others as well. So thank you for that. I don't claim to be an expert in the Title I programs, but my understanding of the legislation, it would really allow by raising the loan limits, right? You're keeping up with the costs of the production now of the homes and the cost of sales. So it kind of provides a viable funding source for those low-income moderate borrowers to finance and purchase the manufactured home. It includes ADUs, I understand, which are an important way to solve this housing crisis, and other improvements for energy efficiency of aging stock. So I think all those are really helpful tools.
Thank you, sir. Ms. Bailey, the FSS program, I think, is extremely important for families. We use it extensively in Rhode Island, but we could make it better and more effective. Could you give us some insight to how it helps families?
Absolutely, Senator. And we're really excited that you're introducing this legislation. It helps families be able to save some money to be able to pay for things like you said, education, and their car breaks down so that they can get to work, and eventually in home ownership, and even becoming entrepreneurs and starting their own small businesses. We've seen the FSS program really do great things for families who are receiving assistance. And the one thing it really tests is how we can use financial coaching and financial assistance for families to help bridge the cliff that families can face when assistance is ending. Now they'll have some resources to be able to succeed and grow.
Yeah, in Rhode Island, it's been a tremendous program. It gives there's really a disincentive to move up because, as you know, as your wages or family income increases, your support goes down, so you're in this terrible dilemma. Here you have resources put aside, so you're not afraid of taking the promotion because you'll lose money, and I think that's great. And many of the folks we've talked to have been able to put a down payment together so they can move from subsidized housing into their own home, and that is probably the way, that's definitely the way to go. So again, thank you all for your testimony, and thank you, Mr.
Thanks, Senator Reid. Senator Scott of South Carolina is recognized.
Thank you, Mr. Chairman. For far too long, the federal government's approach to housing affordability has been a one-size-fits-all, focused on subsidies that actually increase demand for housing, despite billions of dollars being spent through the American Rescue Plan and the so-called Inflation, makes me laugh every time I say that, Reduction Act. The cost of housing, like the cost of living, has only increased. It's time for a new approach, one that actually deals with the underlying challenges faced by individuals and our housing market more broadly. By legislation, the Road to Housing Act makes targeted reforms to start addressing these issues. Mr. Antony, could you speak to some of the benefits of targeted reforms like the Road to Housing Act, as well as talk about how that could increase supply, encourage competition, and frankly, reduce the regulatory burdens that we see today?
I'd be happy to, Senator. Thank you for the opportunity. One of the things that we often focus on when we're talking about trying to solve the housing affordability crisis is to increase demand, except that ends up making the problem worse. If we just have exercise for a moment here. Imagine we gave every renter in the country an extra $100 that they could only use towards their rent. What would happen? Well, landlords would simply just all raise their rent by $100 a month. And so that's essentially what we typically see in a lot of these federal programs that aim to make life easier. They're very well-intentioned programs. And they aim to make life better and make housing more affordable for renters, but instead they end up doing exactly the opposite. They end up increasing costs, not decreasing them. And so things that focus more so on improving supply as opposed to just simply increasing demand have a much better track record. Likewise, if you can give more flexibility in terms of options that regulators have at their disposal so that federal money can be targeted in different ways, in other words, allocated more efficiently, that also seems to have very good results. So doing things like expanding the definition of the kinds of dwellings that would qualify for certain types of subsidies is a very good move in the right direction. Likewise, anything you can do to broadly speaking, increase the financial literacy of those who are poorly off today has an incredible improvement on their quality of life. And the reason for that is because the same characteristics that have typically gotten them into the financial situation which they are today are also going to impede them from advancing further and also impede them from wisely using resources which the federal government or others put at their disposal. I mean, it's largely the same reason why so many people who win the lottery, let's say, or so many NFL superstars end up broke only a few years after they receive millions of dollars, because they simply don't know how to manage their money. They don't understand things like the costs that go into owning a home and everything that entails. And so regulatory flexibility is a tremendous help. Financial literacy is also a tremendous help as well.
Well, you raise an important question about financial literacy, and I think that we hopefully we all can share the importance, share in understanding and appreciating and agreeing, frankly, of the importance of financial literacy, period. I'd say, however, that in the current environment, looking at President Biden's recent State of the Union, he repeatedly claimed that his economic agenda was working for the average person in our country. But since he's taken office, mortgage rates have ballooned by 150%. 150%. Rent is up 20%. Homelessness in a single year increased by 12%. I think it's a fair assessment to say that the Biden policies are devastating and negatively impacting first-time home buyers. Would you agree with the time that we have left, about 45 seconds?
I would, Senator, and frankly, it's shocking how, if you follow the chain of events, you can see how trillions of dollars of government spending led to so many of the problems that we face today. It caused the inflation, it caused the violent change in interest rates which helped freeze over both the supply of new homes as well as the supply of existing homes to the market, and that has greatly contributed to the increase in prices that we have seen today.
Thank you. I yield back my 13
Thanks, Senator
seconds.
Scott. Happily, thank you.
You're welcome.
Happily. Senator Menendez of New Jersey is recognized.
Thank you, Ms. Bailey. The National Low Income Housing Coalition's 2023 Out of Reach report showed just how hard it is for low-income renters to afford even modest housing. In my state of New Jersey, a medium-income renter is barely able to pay for a one-bedroom home. The fact is that there aren't enough rental homes being built. And part of that is because federal lending programs like HUD and the Federal Housing Administration haven't kept pace with the market. Ms. Bailey, is it true that FHA's multifamily loan limits haven't been adjusted since 2003?
Yes, that is true.
Because the limits haven't been updated in so long, over 2 decades, even after adjustments for inflation and higher cost areas, FHA multifamily financing simply isn't a viable financing tool in many parts of the country anymore. Would you say that these limits pose one of our challenges to HUD and FHA meeting its mission to provide decent, safe, and sanitary housing?
Absolutely. The key thing to understand is rarely is it one tool that we use to build any multifamily development. It takes multiple tools to build just one affordable housing development. So whether with the low-income housing tax credit, the loans through HUD, the home program, community development block grant dollars, all of that has to work together, but none of them were actually created to work together. So it's really important to reform things in order to make things align better, and that's definitely necessary with the lending program.
I appreciate that. That's why I introduced a bill for today's hearing that would modernize FHA's ability to finance multifamily housing construction around the country. It's a simple, common-sense proposal that would, among other things, update FHA's lending ability to accurately reflect the increase in construction costs over the past 20 years. And I think this is one element of the supply side that Dr. Antony was talking about. Flooding is one of the most frequent and most expensive natural disasters impacting homes in the United States. And while 40% of Americans live in coastal counties, just 4% of Americans have a flood insurance policy. Ms. Bailey, isn't it true that low-income families disproportionately face increased flood risk?
That is true. Too many developments are in the floodplain.
And so, while FEMA has long struggled to keep premiums affordable in the National Flood Insurance Program, and with growing flood risk due to climate change, I worry that many families face an impossible choice of being overburdened with housing costs or foregoing insurance for the most important financial asset, which is their home. And the cost of flood insurance is directly tied to the affordability of home ownership, especially if your mortgage provider requires coverage. So if you cannot get flood insurance because it is unaffordable and the marketplace is just not taking care of it on its own, and you need it in order to get your mortgage, which most mortgage companies or banks require, then you are locked out. And so that's why our bipartisan NFIP REACT, which creates an affordability voucher program, is incredibly important. I hope we can get to a pathway forward on that. Finally, affordable housing is increasingly located in areas that are far away from job centers, forcing workers to pay higher transportation costs or work fewer hours. According to one analysis, workers are spending $2,000 and 39 hours more per year on commuting than before the pandemic. Housing cannot be affordable unless people are able to get to work where they live, which is why I led the charge with my Livable Communities Act, which creates a federal grant program to incentivize the development of new affordable housing near existing mass transit. Mr. Joseph, can you explain how critical it is that we keep other costs like transportation in mind when developing affordable housing?
Yes, sir, and that was a great bill to support. It was, I think, providing more opportunities to build near transit is critical. It's saving the family commuting times, and when you're lower income and paying for childcare, every 15 minutes, every half hour definitely counts. You're reducing emissions. It just makes so much more sense to build near those, and we particularly appreciated that you would require 25% of the funding in high poverty communities. So it's a great idea.
It is an opportunity to take the infrastructure that exists, maximize it, and create greater opportunities for people to be able to work successfully and spend less of their disposable income on transportation and related costs. Thank you, Mr. Chairman.
Thank you, Senator Menendez. Senator Tillis is recognized from North Carolina.
Thank you, Mr. Chair. Mr. Chair, I don't know if this is already in the record, but if not, I'd seek unanimous consent to enter Mr. Antony's article, "Why Are We Raising Homebuyer Cost for Responsible Borrowers," into the record. Thank you.
So,
Mr. Antony, I like the article. I particularly I like the content of the article. Also, you taught me a new word, defenestrate it, which is throwing something out the window. I didn't know that. I don't know.
Senator Tillis, there's the great defenestration of 1649. There is, correct?
Outside of your baseball knowledge,
That's
it
not
doesn't
baseball.
surprise me
That's
you know that. But
somebody threw a monk or somebody, right? Dr. Antony, who was it? Somebody was
yes.
anyway in the Czech Republic, I believe.
Well, ChatGPT gave me an update.
Somebody
on
check that out.
But I'm going to be honest, I did not know that word. But I do.
Senator Tillis, you now have 4 minutes left.
I do know. I guess the concern that I have, and you noted it in the article, the FHFA, the sort of changing, I mean, I feel like we're almost creating a social engineering dimension to what has historically been a fact-driven actuarial underwriting process. Mm-hmm. Your past history, based on your ability to pay, has weight in what you ultimately have to pay for a loan. And if you are more likely to default, you have to pay a slightly higher fee. If you're less likely to default, you pay a lower fee. But with the new rule, it seems to me you're sending the message, the FHFA is sending a message to mortgage originators that, you know, we're going to charge an average of about $15,000 more to somebody with good credit over the next 30 years. We're going to save the person with marginal credit about $8,000 a year. How does that not potentially translate into problems later on as these loans or after these mortgages, that default rate goes up on ones that are being undercharged for the risk that they're rated after they flow from origination to distribution?
Well, Senator, it's going to increase costs across the system really throughout the housing market. And frankly, we're seeing the exact same thing just put on steroids, I think, with the Basel III endgame regulations.
Yeah, and happily we've heard Chairman Powell say that needs a lot of work, but I think you're right. I guess I'm kind of wondering, you know, where I struggled when I was getting my first house. My parents only owned about a house about half the time that I was growing up, and sometimes they owned a trailer, sometimes we rented one. So, you know, I was somebody who had to work my way through a journey to be able to afford a house. So I'm working hard, saving money, borrowing money for my first house in Atlanta, Georgia. It sounds like to me if I was reliving that experience that I had back in about 1988, that I've got a good credit score now. And my reward for working hard and saving money and getting to that point and a down payment is to have a higher underlying cost. So why wouldn't this create a disincentive for somebody who's on the bubble? For me, you know, why would I work so hard or avoid some of those things that I wanted to do if I know that my credit rating is slightly lower? I'm going to get a concession for that. Why wouldn't that create a disincentive for people to continue to work on trying to improve their credit?
Senator, you raise a great point, which is that if you incentivize something, be ready to get more of it. And that's exactly what we're doing here. And as you divorce default risk from interest rates, as you force lenders to consider other criteria that is irrelevant to that equation or sometimes completely counter to that equation, again, you are introducing systemic risk into the system.
You know, here's what I wish, and we're going to submit a lot of questions for the record, but here's what I wish we were having a discussion about. I just had this discussion with a mayor and town manager and council in my office. I asked them to go back and do what I continue to do when we have these affordable housing hearings. Here, I think we're making a mistake. Should we provide other ways to have people that are on the bubble of affording a home figure out a way to help them out? Absolutely. But not by cooking the books on actuarial science, not by making rating for risk not be what it really is anymore. Where does it end? Or do we just abandon it and come up with a completely different way of providing mortgages? But here's the other thing that we have to have. I've said this in finance, and I'll say it in banking. I won't go too far over. I won't throw the time limit out the window, Mr. Chair. But I have to say this. I wish that we could come together in this hearing on a bipartisan basis to talk about the underlying cost of housing that relates to overregulation and a lack of modernizing. Take a look at why would it that my county commissioners, Democrats and Republicans, expressed concerns with the waters of the U.S. because they knew it was going to increase the cost of development. They knew that it was going to elongate the permitting process, and time is money. If we really want to work up, we're going to have differences of this. Some will be ideological. Mine is just pure math on the latest advice from FHFA. But why don't we come together and look at real savings without putting water, air, or home safety at risk by taking a look at modernizing and reducing the underlying cost of housing? Because we're going to continue to have debates if we use this as the only approach of doing it. But if we get in a room on a bipartisan basis, I think we can take far more, make it far more affordable than these games that are being played by some of our regulators. And I'm going to finish now. Sorry to go over, Mr. Chair, and I'll submit other questions for the record. Thank you all for being here.
Thank you, Senator Till. Senator Cortez Masto of Nevada.
Thank you, Mr. Chairman. I can't think of a more important hearing than the one today to really talk about how we supply and afford, build affordable housing in our communities. And I appreciate my colleague from North Carolina, because I agree. I think there needs to be streamlined permitting at the local and state and federal level. This is part of the problem, and we need to address it. There's 3 pieces of legislation, though, that I have introduced and around housing, because I see the need for it in my state. It's workforce housing. It is all of the above. And it is important that we're working together. And I hope we are able to pass this legislation. I just came from ENR, and there's a lack of housing for our wildland firefighters. I mean, it touches everybody in our community, and we just have to focus on it. One area I want to talk about is the Federal Home Loan Bank System. According to the Nonpartisan Congressional Budget Office, the federal home loan banks receive a $7 billion annual subsidy, with nearly all of it passed along to their member banks, insurance companies, and credit unions. The vast majority of that subsidy has no impact on housing. Their mission is housing and economic development. I have legislation that I've introduced, the Federal Home Loan Bank's Mission Implementation Act. I'm doing an updated version of it. And what I'm recommending is that we at least double the Federal Home Loan Bank's contribution to the affordable housing program from 10% to 20%. That's all we're asking right now. Mr. Joseph, can I ask you, based on that, if we were able to double the contributions to at least 20%, would it help LISC build more homes?
Absolutely. I think doubling it would add several $100 million more annually to this account. That would provide critically needed gap financing for rental housing, because that's primarily what it's used for right now, and we're seeing bigger gaps. But it's also can help affordable home ownership opportunities as well, because that's an eligible use of the funds. So it's unequivocally yes, that would be a great tool.
Right, and I thank you, because some of the biggest challenge is the gap in financing, right? Cobbling together financing to build housing is the biggest issue that I hear in my state. Is that true?
That's absolutely true.
Yeah. And so the next area that I also know that is important for this financing, and a key piece of building affordable housing, is the Home Investment Partnership Program. Home is the largest federal affordable housing block grant in the country. My bill, the Home Investment Partnerships Reauthorization and Improvement Act, would improve the ability of home to support home ownership, including providing flexibility for service members, their heirs, community land trusts, which we're trying to do in Nevada right now. It would also provide local authorities the ability to pledge 5 times their current allocation for investments. This bill would help thousands of hardworking families in Nevada and across the country purchase and stay in their homes. Mr. Joseph, can you talk a little bit about the importance of home in building affordable homes, and how does the legislation and an update of the home program help in today's world of the challenge of building affordable homes?
Sure. Yeah, the home program is really one of the HUD's flagship programs for affordable housing development. It really is that glue. It's that missing piece often we're seeing with our housing credit properties where there are gaps. We're using the home dollars to help solve some of those gaps. But it's so flexible. It can be also used for single-family home construction, home owner rehabs, tenant-based rental assistance. So it's really a great flexible tool. But what we really like about your legislation is increasing the authorized funding levels, because there's just not enough to go around. Establishing the loan guarantee program you referenced to better leverage the federal resources, streamlining the administrative requirements, making them consistent with other federal programs, and expanding the ability of nonprofit housing organizations to really access some of these funds. So a lot of great proposals.
Thank you. And then finally, I want to talk about manufactured housing. This is an area that I also have been focused on because I think it is part of the solution to our affordable housing needs. And I've appreciated working with the ranking member, Senator Scott, and ensuring the needs of manufactured homeowners are included when we're talking about housing. But manufactured home communities are home to about 8.5 million Americans. And it's a very important source of affordable housing. A few weeks ago, HUD announced a request for applications for a new program to fund new roads, water, sewer, tornado shelters, and other infrastructure improvements for manufactured home communities. I'm proud that I led the creation of this program, the Preservation and Reinvestment Initiative for Community Enhancement, which was enacted in 2022. But it was only funded for 1 year. And my goal here now is to make it a permanent key piece of funding. Mr. Josephs, can you talk a little bit why this is just as important for our manufactured housing?
Well, again, the flexibility, right? The price grants can be used to construct, to reconstruct, or repair manufactured housing. It can be used to improve the facilities, as you mentioned, the infrastructure, to help protect the health and the safety of the residents. So it can also be used for relocation assistance and eviction prevention. So these kind of funds are critical, and that sector certainly needs support.
Thank you. Thank you, Mr. Chairman.
Thanks, Senator Cortez. Senator Vance of Ohio is recognized.
Thank you, Mr. Chairman, and thanks to our three guests for being here. Ms. Bailey, I wanted to direct my questions in your direction because there's an issue where I think we disagree on, an issue where we agree on, and I kind of want to tease out both of those because, agree with Mr. Antony that there's a supply problem here, right? We sort of want to be building more housing because that'll drive down the cost. But I really worry about the demand side problem, the housing problem that we have in this country. And that'll tie into a bill that I have with Senator Haggerty, who's also on this committee, to try to address some of that. And the way that our community development block grants, I think, should go to American citizens and lawful permanent residents and not to people who shouldn't be in the country in the first place. But before I get to that, one of the interesting findings from the research, Ms. Bailey, and I think this is an area where you and I may disagree on, or at least we have some disagreements in public policy, if I can assume that you agree with all the views of your employer, which is always dangerous, but I assume you probably have some alignment with them, is the way that illegal immigration, especially when you have it at the scale that we have it in this country right now, probably 25 million, 10 million in the last 3.5 or so years, really does apply some interesting demand pressures on local housing markets. And in particular, there's a study that I want to call your attention to. I won't ask you to comment on it because I don't want to ambush you with it, but really fascinatingly sort of looked at local consequences of the immigration problem in housing. And what it found was that on a county and metropolitan area level, increased illegal immigration really shot up the price of rents and the price of housing. But then fascinatingly, on the neighborhood level, it actually drove down housing prices in the neighborhoods where illegal migrants moved. And the fascinating sort of dynamic is if you ask yourself, you tie this all together and you ask yourself, who's benefiting on the housing market level from mass migration in this country? It's people who own homes in neighborhoods where immigrants don't move. In other words, rich people, right? They're the ones who benefit from this very large influx of illegal immigration that we've had, and pretty much everyone else suffers. And I'm just sort of curious because I think genuinely you are motivated by a concern like I am that we want low-income people to be able to afford a house. We want Americans writ large to be able to buy homes, especially first-time home buyers. We know that's an important part of starting a family. And I know that sort of on the migration question, you're sort of on the opposite side of me. I guess my question is just, given those sort of priors that each of us is bringing to the conversation, would you sort of give me your sense of whether you worry about this illegal immigration problem and whether it is driving up housing prices in a way that makes home buying unaffordable for Americans?
So what I worry about is how we're helping people be able to have a safe place to live. And the challenge that I have with your construct is that it's set in an environment of scarcity, that we just don't have enough. And I just can't believe that in the wealthiest country in the world, that that's the case and construct that we should be operating in. So that fundamentally is the problem, is that we're not thinking in ways that treat everyone with the humanity that they deserve.
So I appreciate that, Ms. Bailey, and I'm going to move on to the other topic where we actually agree. But I guess my response to that would just be housing is sort of fundamentally scarce, right? It's hard to build a new house. It's hard to sort of develop the land to build a new house. And I think all of us probably agree, at least I'd hope all of us agree, that we need to increase the supply of housing too. But you're still going to have scarcity in supply, especially when you have multiple demand pressures on the housing market. Now, illegal immigration is one, but there's another one where I think I want to sort of get your views on as well. And if you could answer briefly, because we're running low on time and I'm trying to talk fast here, but could you talk a little bit about this phenomena of institutional investors buying single-family homes and what you think that is doing to the scarcity problem in the home buying market?
Yep, so that is an issue that we're seeing across the country, and it is creating the situation where homes that would be affordable aren't. And we need to do more locally to think about how we can control how these predatory investors are coming into communities and limiting resources. Especially, they're doing this a lot in communities of color, and that's disturbing.
Yeah, so and I'd love to get more details on that, and we may follow up just off the record because I'm sure you have some insights there that we would benefit from, and I'll have my staff do that. But just two quick final comments here, being mindful of time. I think in the same way that you worry about institutional investors buying up single family homes, and I do too, I think we have to worry about 10, 15, 20 million illegal aliens also applying those demand pressures. And I think both of those things are conspiring against American citizens and making it harder for folks to afford homes. And I just encourage you to sort of think about both sides of that coin, recognizing that we do live in some world of scarcity. And if I could put a pitch in, Mr. Chairman, for Senator Haggerty and I's bill, the No Community Development Block Grants for Sanctuary Cities Act, one of the really disturbing things is that we actually have about $3 billion going to the Community Development Block Grant Program. About $1 billion of it goes into sanctuary cities. And so if we're trying to limit this upward demand pressure on home buying, this is one small effort that I think would be useful in that. And with that, I yield back to, I guess, Madam Acting Chairman. Thank you.
Thank you. So we're in the middle of a housing crisis all across America. Today, though, I want to focus on the housing crisis in Indian country. The federal government has failed to live up to its promises to tribal nations. And one of the ways that we've fallen short, we have woefully underfunded programs for Native communities. In the 25 years since the Indian Housing Block Grant Program was created, Congress has consistently failed to put enough money into the program, even to keep up with inflation, let alone the massive housing needs in Indian country. Ms. Bailey, you are an expert on the housing needs of historically marginalized communities. How have tribal communities been affected by the federal government's failure to adequately fund tribal housing programs?
Thank you, Senator. This is such a critical issue that we don't talk enough about. For tribal nations, housing quality is a huge issue. We haven't helped them invest in housing and in order to keep their properties from deteriorating. Housing overcrowding is an issue, and homelessness in general shows up differently in Indian country than it does in non-tribal areas. So it's a huge, this investment is critically important to highlight.
Okay, so poor condition of the housing, a lot of homelessness, a lot of overcrowding. The federal government's refusal to provide basic funding to Native communities is one of the reasons that I introduced my Honoring Promises to Native Nations Act back in 2022. One of the core promises of that bill is that tribal communities should be entitled to 5% of federal dollars, as tribal groups have demanded for years, in order to fulfill the federal government's trust and treaty obligations. Today, as this committee considers proposals to address our housing crisis, I am reintroducing rural housing service provisions from the Honoring Promises as a standalone legislation. The Tribal Rural Housing Access Act would set aside 5% of rural housing service funds for tribes, Native community development financial institutions, Native-owned entities, and tribal members. My bill has been endorsed by Native CDFI Network, National Congress of American Indians, National American Indian Housing Council, Housing Assistance Council, and National Rural Housing Coalition. Ms. Bailey, you've had a chance, I think, to look at my bill. Would my bill help address some of the housing challenges faced by Native communities?
Absolutely, it would. It's our understanding that only about 1% of these resources currently go to tribal nations. And so being able to increase that to 5% would make a huge difference in all of the areas that are necessary in tribal lands. I think another thing that is important that I want to highlight is in order for them to be able to spend those resources, it's critically important for us to look at how the Department of Interior, the Department of Justice, and HUD are working together. We've got to improve the bureaucracy and streamline that so that we can truly honor the nation-to-nation relationship we should be having with tribal nations.
That's a very powerful point. I want to underscore, though, in my bill, this wouldn't cost the federal government an extra dime, but it would go a long way to beginning to fulfill our trust and treaty obligations that we have ignored for so long. Other members of this committee have already done important work on this issue. Senator Smith and Senator Rounds have a bill that would set aside funds for Native CDFIs to administer the 502 direct loan program, which plays a critical role in helping low-income individuals buy and rehabilitate homes. Our bills go hand in hand. My bill counts every dollar of Senator Smith and Senator Rounds set aside toward my 5% set aside, and it sets aside funding for tribes in other rural housing service programs as well, including housing subsidies for farm laborers. Let me be clear, we need a major federal investment to increase our housing supply if we want to get out of this affordability crisis, and a 5% set aside for tribal communities would be an important start. Thank you, Mr. Chairman.
Thank you, Senator Warren. I will ask my questions now. Welcome again. Thanks to the committee members on this committee. Last year, I joined Senators Rubio and Ossoff to introduce the HELPER Act. This question's for you, Mr. Josephs. HELPER Act creates a new zero down payment mortgage option with a one-time fee similar to a VA loan, as you know, so that first-time home buyers, teachers, firefighters, police officers can actually afford to live in the communities which they serve. What challenges, Mr. Joseph, do law enforcement and other public servants who are first-time home buyers face, and how could the HELPER Act allow them to achieve their dream of home ownership?
Yes, I think you're hitting the right issue with the down payments. There's a lot of mortgage-ready borrowers out there that would meet credit guidelines, but they don't have enough upfront money to get the home. And if they did, they might not have enough in savings to help maintain the home. So that is important. And also the insurance costs that can drive up the cost of their mortgages, by keeping those down, I think those are both very helpful approaches.
Okay, thank you. One of the biggest costs, again, Mr. Josephs, if not the biggest cost in building new housing is land. Across the country, we've seen churches and synagogues and schools with unused land who want to work with local partners to add new affordable housing on their properties, but they essentially don't know how to get started. So how could giving religious groups the tools and advice to support these, we call them YIGBs, as you know, developments help add affordable housing?
Yeah, so we actually administer a faith-based housing initiative in our Bay Area LISC offices to help do exactly this, provide the education and technical resources. Developing affordable housing requires a real specialized knowledge and relationships to navigate project management, funding, deal structuring. So what we do is we provide technical workshops, we provide targeted technical assistance, a development coach, access to grant funds to support pre-development, which is so hard to come by that funding, and even a stipend for the organizations. So if what you're proposing kind of can fund some of that stuff, then that is exactly what was needed.
We will pursue that. Thank you. Ms. Bailey, millions of families face eviction every year. When a family's evicted, as both Senator Lummis and Senator Smith said, everything turns upside down in their lives, as we know. Many have nowhere to go. They have trouble renting another home for years to come. How could the Eviction Crisis Act help prevent unnecessary evictions and the costs that come with them?
Thank you, Senator, for raising this issue. So what we learned actually during the pandemic that being able to help people avoid eviction is actually quite simple. The Eviction Crisis Act can build off of that, giving people a little extra cash to be able to pay their rent that month helps stabilize them in housing and avoid all of the bad outcomes we know comes with evictions, including homelessness.
And you've mentioned pilot in Ohio that's helped improve maternal and infant health by giving housing assistance to pregnant women and mothers who don't have stable housing. Is this the kind of program that could be expanded to help moms and babies around the country?
Absolutely. What we know in the healthcare world knows this, and looking at how social determinants of health work, that housing is one of the first and foremost important social determinants of health, and that is still true with moms who are with pregnant people and moms who are expecting babies. That we know that if we can give them a solid foundation of a place to live, that it greatly improves the health of the mom, reduces her stress, and improves maternal outcomes.
Too often there are, shall we say, bad owners, a minority but bad owners who run HUD-assisted affordable housing into the ground to the point where housing could be shut down, residents pushed out of those communities. Owners who want to preserve aging buildings can struggle to find resources necessary to make needed repairs. What would help preserve these homes so they're safe for seniors and families who depend on them now and in the future?
Well, we need to first think about landlords and help and see if they need help in being able to make those investments. We don't have standard pools of resources to be able to help landlords make minor repairs or even help with accessibility for seniors in their home, avoid trips and falls, be able to get in and out of the shower and the bathtub. So first we should help landlords pay for these things, but we also need to do some better oversight and administration and make sure that landlords are being good faith actors and And actually, I should add the third thing that we need to do is make sure that tenants have legal aid assistance to be able to fight and protect themselves when landlords aren't holding up their end of the bargain.
Thank you. Senator Van Hollen, Maryland is recognized.
Mr. Chairman, I would like to return the favor to Senator Fetterman. The other day I had to run, and he allowed me to go first, so Senator Fetterman, please.
Senator Fetterman,
I got time
Pennsylvania is
today.
recognized.
Thank you. Thank you. So, people all across Pennsylvania has been made it very, very clear that we are experiencing a housing crisis. 32% of renters in Center and Pike counties are paying more half of their incomes in rent. Rents for the average 1 or 2 bedroom apartments are up to as much of $1,000 a month in Indiana County, $1,200 a month in Montour County, and $2,000 a month in the Lehigh Valley. Franklin County is adding 2,000 jobs, but has no units affordable for these workers. We are short 15,000 units for income people in Pittsburgh region alone. Shelters in Dauphin County are at maximum capacity. Addressing this housing crisis is at a top priority for me, and I'm glad to be here today to discuss possible solutions. I'm proud to introduce with my colleagues the distinguished senator from Wyoming, the very bipartisan Whole Home Repairs Act. And now I want to just talk about the history of that. That was inspired in my own state, spearheaded by Senator Savall, my state senator. And I'd like to point out that Senator Savall represents one of the bluest districts across the nation, technically, as well, too. But that was embraced by his colleagues in the Pennsylvania Senator from as red of any district in Pennsylvania as well, too. So if this can happen in Pennsylvania, I hope that we can have this now nationally as a model. And now we have success stories on that. Mr. Tyler of Hawley, Pennsylvania, 87 years old, and worked as a farmer, as a mechanic and bartender and a deputy sheriff. His roof collapsed and left a hole in the ceiling, and the water leaks and exposure had caused partial rotting of the wall and the ceiling. Wayne County whole home repair funds were used to make exterior repairs to the roof, ceiling, and the wall, as well as weatherizing improvements that have reduced his heating bill by 2/3. Remaining interior work will be completed this month. And now, Mr. Josephs, thank you for LISC's support for the Whole Home Repairs Act. Can you please explain what repairs are and what are not covered by existing federal programs?
Yes, thank you for that question. If I may first also add that there's 5.6% of all homes in rural areas are inadequate. They need these kind of repairs. And it's estimated that the Federal Reserve Bank of Philadelphia estimated repair needs of $149 billion on our housing stock, $57 billion in homes occupied by low-income individuals. So this is exactly the right tool that we need. Existing federal programs at HUD, USDA, DOE, and other, they cover certain things like lead remediation or weatherization, sometimes loans for home repairs, but there's really no one-stop shop to get this kind of services. So I think that's the great innovation of the bill.
Yeah, and I just want to drill down on this idea of, I mean, of course, now it's a truly bipartisan solution out of Pennsylvania. And I was lieutenant governor at the time, and I thought that was remarkable. And you have one of my colleagues, again, from an incredibly blue district, in Philadelphia, and now found a huge audience from red counties and districts all across Pennsylvania. And that's why I'm hopeful that there might be a path forward. An expert like yourself now fully endorses this.
Yes, absolutely.
Okay. So we work to ensure the federal program would help both rural and urban areas. Can you speak to the need of this kind of support across these kinds of communities?
Yeah, so I jumped the gun with the stats. In rural communities, there's 1.4 million homes that are classified as inadequate, so they need significant repairs. That's 5.6% of the homes. But also we know there's a lot of aging housing stock in the country. It's at 43 years of age, the median home in 2021 is the oldest it's ever been. In 1991, the median age of a home was 27 years. So this is a problem that's really affecting rural communities. It's in urban communities where you might have higher rates of vacancy, in foreclosures. So it's a tool that can be used in both.
Mr. Chairman, 60 seconds?
Certainly, Senator Fetterman.
Thank you. Ms. Bailey, what's the need for home repair assistance, and how much of our housing stock how we're going to lose, and if we don't have these kind of investments?
Well, thank you, Senator, for that question. We could lose significant amounts of affordable housing without these kind of investments. This is exactly why predatory entities can come into communities and purchase homes, because people don't have the resources they need to fix them. So they make, a reasonable choice to be able to sell these properties, or a family member who inherits the property may decide to sell the property, where if they could have access to some resources to renovate the property and improve the infrastructure of that property, they would keep it. So it can prevent a lot of displacement. It could prevent communities from us losing affordable housing in communities.
Thank you. And thank you for your...
Senator, thank you, Mr. Chairman. Thank all of you for your testimony. And Mr. Chairman, thank you for holding another hearing on the vital issue of affordable housing. We all know we have an affordable housing crisis in the country, and there are two halves to this, and we need to attack it from both sides. A lot of discussion today, I know, on the production side, including using tools like the low-income housing tax credit, expanding that, new markets tax credit. And I think that's a very important part, clearly, the supply side. I do want to focus today a little bit on the choice voucher piece of it, and appreciate the President's budget requests. I specifically want to drill down on a bipartisan proposal that Senator Todd Young from Indiana and I have proposed, which is to use choice housing vouchers, but to also target some of them toward families with young kids, 6 and under, and provide wraparound services in helping them move to areas of higher opportunity. Back in 2019, Senator Young and I introduced the Housing Mobility Demonstration Act, which quickly demonstrated the effectiveness of this approach in terms of giving kids a big leg up and a big opportunity. Dr. Raj Shetty, researcher, has documented clearly the benefits of this and found that where you have kids from able to move to areas of higher opportunity, it has increased their lifetime income by over $300,000 in terms of better school opportunities and other things. And so We introduced a bill based on the demonstration project called the Family, it's a family voucher program with these wraparound services, Family Stability and Opportunity Vouchers Act, to create 250,000 new of these mobility vouchers. So I know that Mr. Joseph, I think you referenced this, at least in your written testimony. Could you speak a little bit to the importance of passing this bipartisan bill, which I should say not only has bipartisan sponsorship here in the Senate, but has a broad range of organizations from across the political spectrum supporting it?
Yeah, the vouchers are a critical tool. You have on the one hand the supply side. You mentioned earlier low-income housing tax credits that can build more supply, but you have to be able to particularly for the lower income families, lowest income families, really provide a rental subsidy as well. So vouchers are a critical tool, and yeah, Raj Chetty's research really demonstrated that the best benefit you get is to the children that are moving into the higher opportunity areas. So I think this is a great idea to promote this kind of program.
Ms. Bailey, I know you've also looked at these issues. If you can expand upon this a little bit, because again, we want to make sure that we target resources in a smart way, and this does appear to be something that is now proven to be effective at lifting opportunities for kids.
Yeah, and one important point is for folks to understand that the number of vouchers that have been going to families with kids actually has been declining because we've been targeting resources to a lot of folks who are single adults for good reason. Part of the the environment of scarcity we're living in right now. We've rightly tried to end homelessness for veterans. We've rightly tried to end chronic homelessness, and we've rightly tried to get folks off of the street as quickly as possible. But one of the downturns of operating in this environment of scarcity means that there are people we haven't prioritized, and we haven't prioritized families with kids. And so that's why it's really important to look at how to expand vouchers across populations. We know the benefits for families with kids, that a foundation of housing helps kids stay in school, gives them a safe place to study, and being able to being in communities that are properly resourced. And we've got to make sure and do all we can to greatly expand voucher assistance, so we're not operating in these buckets of having to choose who we're going to help, because unfortunately someone loses. And lately it has been families with kids.
Well, I appreciate that very much, and I'm a big supporter of the VASH vouchers for veterans and other ways to help our veterans. We need to continue to do that, as you say. But this is also a tool that helps with in an intergenerational way and leads to higher incomes for people who are kids now and more wealth building. So I do hope, Mr. Chairman, I know you're looking at a series of bipartisan bills to act on as a committee. This is a bipartisan bill that has proven to be successful, and it just makes sense to expand it a little bit.
Thank you. And Senator Scott and I are working on a series of bipartisan bills that we hope we can have a markup on. Senator Warnock of Georgia is recognized.
Thank you so very much, Chair Brown. One of the biggest obstacles for working families who want to purchase a home is a high upfront costs, including down payments and closing costs. According to Realtor.com, the median down payment alone, was over $30,000 in late 2023, a steep hill for a lot of families. And with mortgage interest rates still very high, many families may also be looking to buy points to reduce those rates. These high upfront costs are especially hard on first-time home buyers who may not have the cash saved to cover these expenses, even if they have good credit. That's why I introduced the Down Payment Toward Equity Act, a bill to provide direct assistance to first-time, first-generation home buyers to help cover closing costs, down payments, and buy down mortgage rates. Ms. Bailey, who would primarily benefit from this kind of down payment assistance?
Thank you, Senator, for this question. Primarily, it would be people of color that would be able to benefit from this kind of assistance, and people who with lower incomes who don't have intergenerational wealth, and so haven't been able to. They can afford the mortgage, and they can afford to. They've saved enough money to be able to maintain their home once they purchase it, but they don't have the huge amount of savings that they would need in order to enter into the.
I'm sorry. Would this be helpful to rural families?
It would absolutely be helpful to rural families as well.
Thank you. Buying a home isn't just about having a roof over your head. It's an investment in the future of your family. It's the American dream. It's where most people's wealth is. According to a study from the National Association of Realtors, the net worth of a typical homeowner is 40 times higher than the net worth of a typical renter. How would down payment assistance decrease wealth inequality and the racial wealth gap in our country?
It would significantly help close the racial wealth gap for the families that are able to afford to get into home ownership.
Well, thank you so much, and I look forward to working with my colleagues to continue furthering the goal of making the American dream of home ownership a reality for all. I think it's good for those families. It's good for the country. Metro Atlanta has a big problem. Private equity and other large investment firms are buying up all the single-family homes and turning them into investment vehicles. An analysis by the Atlanta Journal-Constitution found that more than 65,000 homes have been bought up by large investment firms in the past decade. 65,000. And according to a recent study out of Georgia State University, 11% of all single-family homes available for rent in Metro Atlanta are owned by just 3 corporate landlords. That's more than 19,000 homes. It's not possible for working families to compete with private equity, to buy a home when any affordable properties on the market are quickly snatched up by investment firms looking to make a profit for their stakeholders. Mr. Josephs, how can Congress help ensure affordable homes in Atlanta and across the country are accessible to working families and not just to large investment firms?
Between 2010 and 2021, the share of homes purchased by investors in majority black zip codes increased from 13% to 30%. So this has been a big problem. One thing we could do, Senator Brown, is introduce some great legislation to make sure that these investors are not taking advantage of the tax code to do these kind of investments, these larger institutional investors. So that's a start. We think the Neighborhood Homes Investment Act can be a counteraction to this because in that program, you have to buy and improve homes for sale to lower income people. So it'll be for sale properties. You can't just gobble up the homes and leave them out there for rentals. It's for sale. You're going to make improvements to the home. So we think that's another great tool.
Well, thank you so very much. This is a real problem everywhere I turn in my home state. Literally, I was just on the street Sunday walking and random citizens, hey, I'm glad to see you, and wanted to talk to me about this very issue. For private equity, a home is just a row on a spreadsheet tracking shareholder returns. Obviously, it's different for the ordinary citizen who's trying to buy into the American dream. We ought to use the tools available to us, do everything possible to improve this situation. Thank you very much for your testimony.
Thank you, Senator Warnock. And the issue of private equity, this committee takes very, very seriously, and the damage it does, so thank you. Thanks to the witnesses here today. Thanks for providing testimony. I would like to submit to the record more than 200 letters from national, state, and local organizations and leaders, including mayors and sheriffs and governors, in support of the HELPER Act. It's a common sense proposal to make sure that the people serving our communities can afford to live there. I hope more of my colleagues will join the 20 Senate co-sponsors, both parties, 150 House supporters, both parties. For senators who wish to submit questions for the record, those questions are due 1 week from today, March 19th. To the witnesses, you have 40 days to respond to those questions. Thank you again. The committee is adjourned.